Hello everyone, welcome to Macro Cafe. This is a place where every single week, at the end of the week, we review some of these larger major markets, and I'm trying to offer you my perspective versus what happened during that particular week and what I think it's likely to happen moving forward. So we're going to follow all the indices. We're going to take a look at metals. We're going to take a look at oil, Bitcoin, and I also have a couple of interesting charts to show you from the internals of the market structure. But before we do all that, let me introduce myself. My name is Chris. I am your host, the Cowboy, as they know me out there in the trading community. And this is Elliott Wave Cafe. Let's get started. All right, before we go, I invite you over to my Twitter channel up here at Elliott Cafe. Go ahead and subscribe and or follow me, I should say. Up here, you could find a lot of different tweets and thoughts about the market on a daily basis. I think you're going to get a kick out of that. And then, you can also subscribe to this newsletter that I have. It's a free newsletter. It's called The Pigeon and the Statue. Every single morning, you're going to get a mail in your inbox with the latest developments in the markets covering, again, the S&P 500, Dow Jones, the NASDAQ. We'll take a look at gold, at silver, at Bitcoin, and the dollar. So I go through that every single morning, kind of what happened the day prior and what I think things are about to be heading, and it's all based on Elliott Wave analysis most of the time. So, go ahead and subscribe there. I think you'll find it quite interesting and informative. All right, let's get started in here, and I'll start with the S&P 500, which closed off a week in a little bit of a bullish note, today, and it's been, a pretty, bad month of February. You can see back here, basically, by the look of these three candles in here, that we've gone, it was pretty much a decent sell-off after we've had a strong January. Now, you see in here during the beginning of the year, since the beginning of the year, we have cracked above this declining trend line. That's something that, every technician out there is watching, and, every kind of market participant, because it's it's an important technical indicator that kind of shows you where the trend has been and kind of what's been happening with it, right? When you have two touching points, that kind of makes a line, and then when you start to touch for the third time, that creates kind of a trend, and it gives it more importance. And then when you already start to touch it four times and react from it, it gives it a lot of validity. So the fact that we have broken above it, it's it's no small feat, and I think it will probably continue to provide, at least for now, a little bit of guidance kind of moving forward. So the fact that we have broken above it, I think it's definitely warrants attention in here, and we're coming back and retesting it here, basically as we were finishing off the month of February and beginning March, and we are seeing a pretty decent reaction out of it, with most of the action here happening for the past couple of days, as we were kind of rallying after we tested those important levels. So I do like kind of what happened in here. I do like also the fact that, we're staying obviously above the 200-week moving average, which was tested at the bottom of the sell-off here in October. And we kind of went back above it, and now we're trying to climb back above some of the other moving averages here, about the 20 weekly EMA and the 50 weekly EMA. And once we get and establish ourselves above those, I think this trend will continue to move to the upside. Another thing that I want to show you is the PPO up here, which is, a slight variation of the MACD. It's basically the percentage version, and we're climbing up into the positive territory since let's say maybe around mid-January, when we kind of had the breakout after December lows back there about 3,800. And we haven't been positive in a while, ever since this kind of bear market started to take place. The PPO was in the negative territory, suggestive of a, decent and kind of prolonged bear market in here. We had a little bit of a divergence with the October low, and we're starting to move higher, and we are now in the positive territory. So that's another thing that is important. Sure, you can always fail and kind of come back. I want this alligator jaws to kind of start to expand a little bit to the upside, the difference between these two lines to kind of get larger, and that will come with further bullish moves. Now, you can see in here that the markets reacted at about 4,200 before pulling back. That's an important resistance that comes back from the beginning of 2022, with several months during March and April being tested in here at that level. Then during the summer, when you had that initial rally higher around May, June, we went up back towards that 4,200. We climbed back above it again in August, and then we went back up towards 4,200 back in September, and before we flushed lower. Now, when the first initial rally, again 4,100 stopped us in its tracks, and then we pull back, and again. So again, this 41 to 4,200 is an important level. An even larger one, it's up there at about 4,300. So all I'm studying in here is basically the price action. If you wanted to know a bit more about kind of how I'm looking at the counts, I'm not going to go through them today. I just maybe briefly mentioned them, but basically you can go in the Elliott Wave Cafe Daily Drip up here, and you will see, pretty much what the counts that I'm looking at in a 1, 2, 1, 2, and kind of how we're looking on the internals. With today's move, actually, when I'm going to update this, on Monday, then you will see that this move actually went today above, I think we went above 40.20 if I'm not mistaken. Let me just see back here. What was the high? It was 40.48. So we went about 40.48, and we actually closed at about 40.45. So, important development here for, this wave 1 from the lows, which should be followed by a 2, 3, 4, and 5 moving forward. So just a brief touch on that. So again, I was talking about these horizontal levels. I think they're very important, and the 4,300 one, will be the one that once we get above it, I think the bears are going to lose a lot of their arguments to the downside. They're already, under a little bit of hot water here with the break of the trend line, with the break above the moving average, with the PPO moving higher. The momentum is in favor of the bulls, even though the month of February felt pretty nasty here coming to retest. But I was talking on Twitter, I was talking to my members through videos, and I was kind of screaming from the top of my lungs that these levels back here, are very important, and they offer a great risk reward for some bullishness. If you took those signals from the market, I think you got, nicely rewarded, and you will continue to be rewarded as this market, I think, is going to continue to push to the upside. 3,800 is the level on the downside. That's very important. And if that gets taken out, I think we're going to go lower. All right. So, for now, we held up here, and it looks like through this little bit of a hammer, we might continue to have some bullish, price action. Now, next week is going to be an important week. We're going to have, plenty of data. We're going to have the job reports, I think, on Friday. Then I think on the 14th, we have, the CPI data. Then on the 22nd, we have the Fed, so a lot of things can happen between now and when the Fed speaks. We'll see what the inflation is. But I tell you guys, what I see in the markets underneath the surface by studying the industries, by studying the sectors, by studying some of the stocks that we're watching on a daily basis in the pro room, I'm seeing a lot of stocks breaking higher, breaking to 52-week highs. I'm seeing a lot of participation in industrials, in materials, even some financials. There's discretionary that looks good. The ratios are looking fine. So there's a lot of things happening underneath the surface. I repeat this every single time I do this macro cafe here, since I turned bullish in January. The fact that those signals are coming in are keeping me you know, with a positive tone. You look at aluminum, you look at, you know, transports, heavy machinery, you know, all kind of, you know, subsectors, sub-industries in that, industrial sectors and material sectors. You know, those things are just ripping. There is a quiet bull market, you know, happening with stocks that a lot of people are not used to kind of following or seeing. And those things just look beautiful uptrends to the upside, not even caring that the S&P 500 is still kind of lingering at these levels. So I think, you know, they are important to watch, not just Microsoft, Apple, Tesla, and, you know, Amazon, Google, and a few of the other ones, because they're not really doing a whole lot, and maybe they won't do much for a while, you know. So we'll see. But that's one thing that I wanted to kind of show back in here. So now taking a look at the NASDAQ, you know, after I bored you with the S&P 500, I put a little bit more information on here because I think it's important to watch. See, NASDAQ has been kind of outperforming in here since the beginning of the year. It's the best performer, you know, for good reason here. You can see what the price action is. Now it had its you know, a much heavier drop than the S&P 500, you know, you can see now that you know, what happened here over the past couple of days also created a beautiful hammer of this break and of this kind of trend line that got broken to the upside during the month of January, and we're reacting from those moving averages and from those key levels. So if this is true, and it seems that that's a pretty good signal on a weekly basis, I think that we should continue higher in here and test, you know, come towards 13K. If we're able to, you know, that's another important level here. You can look back in 2021, and then, you know, a couple of tests here again in the summer of 2022. And, you know, now we stopped again at it as we were kind of making this January rally. So if we get back above that level, the next one that's going to be important is about 13.5, 13.6. And if we crack above that one, I think we're on our way to new highs. So, you know, we still have a little bit of fight ahead of us, you know, but it looks sort of encouraging. And I want to show you kind of here what happened with the volume lately. And why I put a lot more importance to what's happening here versus kind of what happened in the past. Because everybody says, well, you know, why isn't this like something that, you know, looks like this or looks like that? Well, the difference is that you already cleaned a lot of the market, right? And you basically reset the tables for the market participants. You killed a lot of stocks. You killed a lot of people that were bullish up here. Right, and the move, you know, the move from the lows here, it's way more important now. I mean, look at the volume. So look at this first rally that we've gotten back in the spring of 2022. You know, the market went higher a little bit in here, but then every subsequent advance in here was in a much lower volume. So that was a fake rally. They pushed lower on higher volume. Then we've done another rally in here that the market didn't really care much about it. I mean, you can see in here a little bit of volume, but not much. It was pretty much flat, and then we failed again. Now, from the lows in October, you know, we started to get increase in volume, you know, much better, much higher than anything that's kind of been happening before, telling you that there is interest coming into the market and good participation starting to come in from these lows. We sold off with another scare, you know, a little bit on higher volume, retested those lows for the third or fourth time. And then after we created this kind of double doji up here at the bottom in, you know, when this is the end of December, right? We started to increase the volume and the buying starting to pick up steam. Now we're correcting a little bit in here on our volume, and then this week again, you know, we have a high volume candle coming in. So all of these are positive sign for price, and with the NASDAQ cracking above the zero line in here, that's a positive signal. And the market is telling you that it's likely to go to the upside. Okay, now there's no guarantees in this market, right? There is nothing that's 100% sure. I'm just telling you what I see, kind of how I'm reading price and how I'm looking at things. Again, if you want to study the, you know, the counts in here, this was a corrective move. We moved way above 12,151, which is kind of what I wanted to see to start to secure a little bit better that second wave pullback of the 50%. But the count is the same, you know, 1, 2, 1, 2, and we're looking to break to the upside from the 38%. I mean, the close in the NASDAQ was 12,290. all right, and I mean, way above this. This is 12,150, so another 140 points to the upside. Pretty impressive rally. So when I'll update this chart, I'll start to put a wave one back in here. And you can read all about it back here because I'm kind of going through those details. So again, that's the Nasdaq. Couple of resistance levels to still kind of get through. But it starts to look fairly good. All right, now Nasdaq Composite is the same, so I'm not going to repeat this. It's pretty much a similar picture, except that this one has got a lot more stocks. I think there's like 3,500 stocks in here versus Nasdaq 100. All right, let's take a look at the Dow Jones. This has got another interesting story. The volume in Dow Jones, it's a little bit less. I mean, it's a market that's, it's traded, but, nowhere near the participation and the volume that you have in the S&P 500 and in, and in the Nasdaq. But it does look good. I mean, this the scandal that we've gotten this week, I think this kind of volume rally out here, I think it's important. Also, the fact that we're coming from what looks to be a very simple flat formation. At least that's kind of how I'm looking at it at the daily drip up there. That's an A, B down in C of a flat. It's a 1, it's a 2, and we're looking to break. Now you can see in here that's a massive level at about 34K, just slightly higher. And it's been tested so many times in the past that the market, has a good long memory about it. So once we crack and close on a weekly basis above these levels, I think all hell will break loose and we'll begin a larger third wave to the upside. So just be ready for that if we're cracking and closing above those levels. Okay, I'm just kind of saying that that's kind of how I would read it when it starts, kind of happening in here. And it was pretty resilient. The sell-off was not that deep. The move in here was, was kind of ugly. I was thinking it could be a different flat, but I had an alternate and I was kind of prepared for a little bit of a sell-off, which is, stuff that we have to adjust in Elliott wave and just kind of say, I think it's kind of short. It might be a little bit more, but then again, it's another signal I gave to the guys in the program. I said, it's time to buy the Dow because, Dow had pretty good support right here at these levels. And, it looked like you wanted to outperform, especially with the industrial material, some of the stuff that's in there, that it can probably push higher. And it sure did. Today, it didn't do as good as, it was only up 175, while, the other ones were a little bit higher. But I'm sorry, that's this week. On the daily basis, I'm not sure, but I think it was up about 1.2, I think it was today, versus, almost, I think, 2% into the Nasdaq. So anyway, it's a market that, needs to be followed. Why? Because it's a little bit more balanced. It's got stocks from all kind of sectors and industries. And, if it responds well, I think that's a positive sign for everything else. You really don't want this to kind of fall apart because there's huge stocks in there, right? With a lot of weighting. So, that's kind of what's happening in here. Again, the PPO, it's kind of firmly to the upside back here. I think that's quite important. I'm pretty positive on it. All right, let's continue to go in here. IWM, it's a market that I don't cover in my daily drip. I might include it a bit later, but again, there's a lot of stocks in here that have been acting pretty well. That's why this one has been even more resilient than the S&P 500 and even the Nasdaq looks like, right? The pullback was quite shallow. Why? Again, because in those 2,000 stocks that kind of make it up, and in the small cap, if you look at the small cap industry sector, you will see amazing charts in there. I've ran through the guys in the room, I think a couple of days ago, to some of those stocks, and it's just it's very interesting breakouts. From transports, oil, all kind of stuff that's breaking higher. Again, so anyway, this is the Russell, and you can see that big resistance support now at about 185, right, at a 20-week EMA. That's kind of crossing over. And, the trend line in here was not as pretty and into some of the other markets. That's why I didn't even put it in here, although you can connect 1, 2, 3. And we kind of cracked back above it. It's a little bit sideways, but it's, higher high and higher low, higher high, higher low. And, if we can crack back above 205, which is a massive level here in IWM, we can close back above it. I think new highs are coming here as well. Again, just kind of look at the volume on this kind of rally from June, July, summer. Nobody really cared much about it. I mean, the volume was actually dropping as the markets was rallying. So that was a nothing burger. We got a bit of an increase in volume in the first low. And into the second one here, not a whole lot, but here's what I'm watching and kind of what I'm waiting for the next week. I want to see a volume candle starting to kind of creep up above this resistance level, and if that happens, I think there's going to be a good signal of a further breakout coming in here. So I'm aware of this kind of slower volume in here with a little bit less participation, maybe, but I think once this kind of clears it up to the upside, I think we're going to have a pretty good explosion. And look at the PPO also moving higher. So guys, it's another market that's definitely got a bunch of interesting stuff in there. Take a look at Bitcoin really quickly. We've had a bit of a rejection from the 25K. It was normal that it was gonna be some kind of a reaction. I mean, we talked about this, and you could see right the highs from the August, in 2022. That was a clear level. You drop back in here in May. Plus you had a 5-wave move up in there. So there was a bunch of reasons. You had the 200-week moving average. You had the 50-week moving average. So there was a big confluence of levels. We pushed back in here. Now, the question is, now if we have a 5-wave done, and you can see this again, you can go ahead and read this back here on, right here on Bitcoin. Let me just kind of pull it up. That's the idea, that if you have a 1, 2, 3, 4, 5 complete, then you're looking for a second wave, which could drag lower. Now, the question is, if you're breaking higher in this market and you're pushing into the month of March, maybe even April, and you continue to kind of climb higher, I don't know if Bitcoin is going to do this, right? And for that, I have something a little different, which is, the probability that this could still be an impulse with the correction as long as 21,400 remains untouched. You go ahead and read that because I explained it in there. But if it remains untouched and we're starting to break higher back above 24K, I think there is a chance that you're pushing higher, right? The more obvious count, it is this, 1, 2, 3, 4, and 5, and then this should be a second wave, and that means that, you will have a little bit of travel. I mean, it's not going to finish up with just this little decline, which you can see here on the a little bit on a bigger picture, because that's an ABC, maybe that's a W, you're going to get an X, and then you know how it is. You can get complex into a second wave and continue to move to the downside. Then you got some fibs towards 50, maybe 38.2, maybe 61.8, or maybe basically, a combination of the three. You have the 200-day moving average right there. You got a 50 fib. You might have a bottom of the channel, depending on kind of how this will unfold. But kind of going back, here is the 20-day EMA sitting at about 21,161, and this level there, it's important. I didn't place it, but it's 21,400. That's what it's at. And if we're able to hold that and move, maybe we're still in some kind of a flat and we're pushing higher. Look at the volume. I like this. I like the fact that we have, as ugly as this consolidation here kind of looked, which I was expecting it to do one more leg lower, but it broke higher on higher volume, on large volume, right? Look at this. And then it kind of, retraced a little bit in here as we were approaching resistance levels, and the sell-off is in a much lower volume, so I don't know how much we need to trust it, but again, if we're seeing a reversal out of here, I'll continue to watch it. We're above the 50 on the RSI, which during the bear market used to offer resistance, at least on this high, and then it wasn't even able to climb back near 50 on any rally. Basically, it stayed towards 35 in here. But now we're back above the 50 line, and that offers resistance. It looks, I think it looks interesting in here. Some terrible news need to come out and kind of get Bitcoin to break, let's say, these, 18K, I think it is, right? Back here, if it breaks below that 17,800, that's a key zone. If you break below that, I think you're likely going to travel and make new lows, and who knows, what's going to create that. And we have a count for that, which is an alternate, which is that's and I showed that on Twitter and in my other presentations, that's an A, B, and an up in C of a flat, 1, 2, 3, 4, down in 5, with the with the disproportion that this fourth wave would have compared with the wave second, right? I'm very aware of that. But that would be how you would start to sell lower. For me, again, very important to stay ideally above 20, above 20,000, 21.4 up in there. And if you break 17.8, if you break 18K, I think we got, larger issues. That's why I think, this 61.8 is about right there. It's about 18.6 or something. I'm kind of squinting at it, but I think that's what it is. So again, got to stay above those levels. Okay, if you break above those, all hell can break, can kind of break loose. So that's just a little bit of a touch on Bitcoin. I'm looking at the PPO, not yet in the positive territory. It's been negative for all the 2022, even here in 2023, starting to kind of come back from it, and a little bit of a close higher. Would be encouraging. If the Nasdaq climbs higher, guys, I would not be surprised to see Bitcoin turn next week. But we'll watch. Look at this beautiful breakout, and this is kind of what you want to see. From these levels. I mean, it was kind of hovering and building this inverted head and shoulder back in, August, September of 2020. And then, it pushed higher. First volume candle in here that broke higher, and then it was all up from there. And then it started to kind of recede as we were kind of, getting the tops, right? So this in here, right, is probably kind of what started this rally, and, we're probably going to grow even stronger if we're pushing to the upside on here. All right, let's go and take a look at TLT, just a touch on that. So this is the 20-plus Treasury bond. And the reason I'm talking about this is because the yields are very important in the way the stock market functions. And as long as the yields continue higher on the 10-year, on the 2-year, on the 30-year, right, those are kind of putting pressure on stocks overall. Everybody talks about this competition now that the stocks have, because you can get 5%, right, on some of these bond purchases, and then why would you take a risk, in the stock market when you can get basically a risk-free return, even though it's still negative with inflation being towards 7%, but still, you're not taking, let's say, the risk that you're taking in the market, because you never know, right? What if it crashes and you lose everything? At least in here, you got some, some kind of coupons to cut and to look into. So this is the TLT. This looks like, just a simple maybe impulse. You got an ABC in here, and maybe we're pushing higher. There is a count that says that that's a 1, 2, and you're doing a 3, and there should be a 4 and one more push lower, which means higher in yield. So that's kind of what I'm watching, and I'm going to be, scanning for clues. I don't have as many indicators that I would have in the stock market to kind of look at all of that in here, but I'm kind of watching it like a hawk, because I think it's important what happens. You have this resistance at about 97.5. I think, nice little hammer. So maybe, over the next couple of weeks in here, you can push higher towards 108, right? Bonds higher, yields lower, stock market higher. That's the idea. Here is the 10-year yield, right? That's the one that's important, that hit about 4.1, I think. Was the high. No, 408 was the high this week, and we closed at about 397. So we, leave it for rejection back in there, but we remain, quite elevated in a pretty big uptrend, with rejections at the 50 RSI. And again, we're looking at this as a wave 1, 2, 1, 2, 3, 4, 5. So that's your 1, that's your 2, that's the entire 3. And maybe 4 is over, or maybe 4 it's forming still into some kind of a triangle with another push higher. A break below 330 on yields, we wouldn't be necessarily out of the woods, I guess, until you're starting to break below 2.6, right? But for the yields to drop that much, we would have to get some pretty bad economic news. We would have to get some hints from the Fed, I think, that they're, stalling or cutting or whatever. But the fact that the market is pretty resilient with yields being about 4%, I think that's very impressive and important at the same time. So again, but lower yields are better, right? Any strong increase in yields, it's going to be problematic. But I think the market might sniff it out that this is just the final move. If you look at the 2-year, which I don't have in here, there's huge divergences on the weekly charts, on daily charts, with the 2-year yield, what it's trading at. And you can also see a much cleaner 5-wave move up in there. There's a big divergence, even because I'm trading futures on the 2-year and the 10-year, and you can see at those, the futures, if you want to trade them, it's /ZT, that's the future symbol for the 2-year, and then /ZN for the 10-year, and then you have /ZB for the 30-year if you're a futures trader. And you can see on the 2-year, how we're pushing in that final 5th wave down, and it's likely that those bonds will, those nodes basically will push higher, and the yields will drop. So I think it's a pretty interesting story in here, and that could facilitate the next leg higher in the markets in here. So very, very important to pay attention to the yields every day and where they are, because they're basically invert correlation, they're basically inverted to the stock market, to the S&P. Okay, let's take a look at the dollar, which had a pretty beautiful crash since that famous, there is no end in sight rally. September 28th, I think it was the top in the dollar. And we pushed back towards the 100 level. Massive level in here at about 100 to 101, back from 2020. And there's several levels to the left in here that you don't see. And it did a nice bullish hammer on the weekly time frames. Again, we were watching this one with our members as he was kind of doing this final sell-off, and I was pounding the table. Listen, the rally in the dollar, it's coming. Just kind of get ready. There's going to be some interesting moves in here, and we're targeting 105.50. Now, I think the highs in the dollar was 105.32, so very, very close to those levels. Why? Because you had a prior 4th wave, you had a pretty good resistance. So there's reasons for all of that. I'm not just picking that up, out of nothing. It's just clearly levels that the markets are watching and the rest of the participants there. So we're stalling a little bit up in here. We're pulling back. If I am to say that this is, a 5-wave impulse, which it seems to be, and this wants to correct higher, I have my doubts that this is the entire correction, right? So that could be just, again, an ABC simple or a wave A. You're going to get a B, and then you're going to get up in a C wave, over the next, let's say, maybe couple of months. So I don't think we're out of the woods from the dollar strength. But as long as if the market sniffs that that's just a correction, I think that's not going to have any trouble with the markets in general, right? With the rest of the equity market. So anyway, we're stopping at about 105. The 38.2, it's about 105.97. It might get touched. And then something that's a little bit higher, it's at about 107. And look, there's a confluence here, again, horizontal levels, with a 50% retracement of this decline. Anything above 109.30, I think it's a big problem. And it could actually, continue to move to the upside under those circumstances. I think that's the case because, again, the yields are running, toward their end of their cycle up here. Temporarily, right? I mean, I can't tell you what's going to happen, 2 years down from now, but at least maybe for the rest of the year, we're not going to see, much, much higher yields. So, why would the dollar, rally in such a strong manner? Things really have to hit the fan for it to break and create again, huge dollar demand and safety and cash and all of that. So I think we've done that already in 2022. So again, I'm updating this one as well, so you can take a look at the dollar back here, right, through this ABC up into these levels, and then kind of a continuous daily outlook at the candle at some of these FIBs to just kind of see what's happening, and I'm monitoring this and kind of explaining what I'm thinking about that market daily. All right, let's move over to the next one in here. So that's gold. Again, we called this sell-off out of here. I was just slightly early on it. Surprised to actually see it go towards 1975. I thought it was going to stop towards 1920, 1925. So it really, pushed a little bit higher out of there, but then we had that massive rejection on the weekly basis, and it was kind of all downhill from there. We took a couple of successful trades into this move. We're sitting back towards these moving averages in here and some other horizontal support that I haven't put on here. I think that's a wave 1. Let's just call it a wave 1, and that's a wave A. You're supposed to be getting a B wave rally and a C wave to kind of complete just a simple zigzag before you move higher. If this is some kind of an A, B up in C, and that's a wave 1, right? And that's an A, B, C and some kind of a wave 2 and some kind of a wave B, then that's a wave 1. You're still getting a rally in a wave 2, and then, a sell-off low. So it's a couple of counts. Overall, it's a big sideways mess in gold. I do like this reaction. I don't have anything against it, and especially, if, the dollar sells lower, I think, there's probably gold can try to move to the upside. I don't see a lot of upside in gold until maybe after the month of June. I think, you're looking for, what are we, March? So again, March, April, May, I think it's still going to struggle. Maybe get back towards 1900 and do another leg lower and so on. Again, I'm trying to keep you up here on this, up to date every single day with that. Okay, so that's gold. Nice, again, a little bit of a nicer volume, a nice, let's say, bullish engulfing out of here. So I would not be surprised if it even continues. But on a smaller time frame, I think that's a wave 1 and probably going to get a 2 or a B, and then maybe another push. So that's gold right out of these levels. 1925 here again, massive level. Let's take a look at really quickly. I'm just going to brush off on copper. Higher highs and higher lows after the lows in July. The fact that copper continues higher, I think it's important for just for the global economy and for understanding just the market in general in terms of risk on, risk off. This is a really good barometer for risk. Every time the sell lower like that, I think, copper can kind of smell that the markets are in trouble and people are dumping copper, and they're excited about it, about the economy, about, things probably being positive when people are buying these contracts. So has a heavy industrial use, and you can see the other base metals are rallying as well, pretty crazy, and a lot of the stocks that own them are rallying as well. I mean, for God's sake, you got coal. Look at Arch Coal. You got coal running higher. So again, that's just the kind of in the energy field. But just do a trend line in here. Do another trend line. It looks like we're in a channel. Next level to the upside. 450. If this gets taken out, I think we're gonna move to the upside. So interesting. Maybe just a simple ABC here in copper. But this again, just like the dollar, I'm not actively trading it unless I see, really interesting stuff or levels here getting tested via futures. But it's a gauge on my dashboard along with the dollar that I'm watching daily, along with yields, and I'm trying to get a sense of where the markets are moving, where the weaknesses, if we're risk on, risk off, what's going on in there. So that's copper. Then take a look at the oil market. This one is a little bit on a shorter time frame because of that big drop, kind of screws up the chart. So I pushed the chart for 2.5 years maybe back, something like that. I'm starting to get a bit more bullish oil. I was just telling my members that I was closing off Friday that I think next week I might start to buy some oil. And why? Because, I'm surprised that its resilience appeared at about 72. Numerous tests of these levels without any closing belows, right? Bullish engulfing, a nice little rally back here, another bullish engulfing here, another rejection, a bullish close. PPO that seems to be turning higher. So I don't know. I think that there might be some rally happening in oil in here. And listen, I'm not going to look for much, but take me over to 95 and I'll take it. I'll trade this via futures. You can buy USO, whatever you want. I mean, no advice exactly on how to do that, but there's a lot of vehicles. So, up to 95 in here could be some decent targets, and maybe even a little bit higher. I was bearish oil for a long time here, for ever since we kind of did this fake rally in here. I was telling my members, I don't like oil, and I don't think it's going to rally. People were calling for oil to 200 to 300 back here, and even here, and I was telling people about the lines at Costco that I'm seeing. I'm like, really? Lines at Costco, that's bearish. People are buying oil like crazy exactly when they shouldn't. So then we dumped in here, and we dumped for months and months and months on end, and we're finally kind of stabilizing, and maybe now we're going to get a bit of a rally. We'll see. Nothing really longer term. I don't really care that much, but if we can break and do a little bit of a close up here next week, I think we're looking towards 95. Now let's take a look at IFA. These are the markets outside US and Canada, right? So you're looking at some Europe, you're looking at Asia, Australia, stuff like that, and a little bit of a sell-off followed by a pullback. Again, I'm just kind of watching this to see how the rest of the world reacts and kind of how some of these levels are. And I'm going to write the strong pigeon report. That's in here, guys, and that is I'm going to take you over to it. It's a very simple newsletter that comes once a week, and that takes a look at the larger markets in general. Okay, so I'm putting a bunch of candlestick charts in here with performances, and then you can kind of track and see what's happening from a week to week basis, and who's strongest, who's weakest, kind of how the charts are looking. And I provide some commentary on that as well, because I think it kind of helps you, and helps me at least, stay in tune with the market, and kind of what's working, what's not working, where should I be, and what should I avoid. So again, this is called the Strong Pigeon Report, and it's part of the Pigeon and the Statue newsletter. Okay, so IFA, we talked about that, and then volatility index. It had a nice little rally, a little bit scary, back towards 24, and we're crashing lower. I can't wait for it to get back below 17, because once we're getting below 17 and towards 15, those are interesting levels, a little bit more complacent, and maybe people will start buying puts, and who knows. But thing is, if this moves lower, right, then we're eliminating the upside risk, and it's never really eliminated, but it's just then you can move more towards a trending market, not such a volatile market. When you have VIX at 30, I mean, Jesus, you're getting 3-4% in the indexes every single day, up and down, right? So who can sustain that? And that's why VIX is, it's got this type of kind of reversal structure, right? It's always kind of mean reverts, and the other stuff kind of trends. So that's that's just kind of my coverage in here for an overall weekly outlook and all this. And then let's take a quick look at just a couple of charts, and I'm going to close it off shortly. Main markets comparison in here. Basically, I'm looking at the SPY, DIA, right, Dow Jones, 1Q, which is Nasdaq Composite, and IWM Russell, and I'm watching them daily. I have about 30 or 40 charts, and this is what I call the important chart list, from breadth indicators, sentiment, volatility, all kind of stuff in there that helps me gauge the market. And basically, this is the 200-day moving average, and I'm looking for the relationship. Above it, we want to be bullish. Below it, it's a problem. Right now, the markets are above the 200-day moving average, and there's no arguing with it. What I do like is that we have some retest and bounces off of it, and to me, that's a pretty good thing. I'm also watching any divergences, as somebody that's not responding properly, or is doing something silly, is not really confirming what the other ones are doing. Similar story with the bottoms, which kind of worried me. Like, why are these markets doing these kind of weird bottoms at several, in kind of different times? So it is what it is, but right now we're looking at the right side of the chart, and we're getting kind of bounces out of here. So that's that. I'm also watching the XVG. This is the value line geometric index. This is the medium price of a stock in United States here, and you can see that the pullback, basically, it's got a lot more. It's got a lot more value than necessarily the S&P 500 or even the Nasdaq, right? It's taking the aggregate prices in here, and you can see it's 583. And it's only corrected about 38.2%, while the S&P 500 corrected 61.8%, right? So a much longer dip and retracement in the S&P 500 and not in the value index. Again, to me, that's speaks to a market that's got some strength. It basically never dropped below this high back here. Its rally was much stronger than even the S&P 500, and I think, again, that's another positive sign. At least that's kind of how I'm reading it. So back from 38%, let's see if we can continue to push to the upside. And another one here that tells you a lot of the story underneath the market. Again, it's the QQQ versus SPY, so that's that beautiful spread. Qs versus the SPYs, and when people and Wall Street wants to take a bit more risk, they're buying the Qs, and here it is since the end of December, beginning of January. This ratio has been moving higher. It's been flat, even though the markets came lower. The S&P 500, this ratio towards risk remained elevated, 0.74. What do you think is going to happen now if this market moves to the upside? I don't know. Is the SPY going to move faster than the Qs? I don't know. I doubt it. I think the Qs are going to continue to outperform. I think there's a lot of stocks that were beaten down, and there's going to be quite a performance out of those, and that's going to continue to push this ratio higher, which is a bullish ratio. And this one was signaling, back then, the markets actually were falling out of favor in here as they were dropping and they were making new highs. Now look at XLY versus XLP. This is consumer discretionary versus staples. Again, just in the favor of discretionary. Why would people buy discretionary when there is a recession, when there's fear, when they want to buy toothpaste and toilet paper and whatever else? Necessities versus what you would need in the market. Basically, that's XLY, and this one is still positive and just slightly correcting in here. Much larger drop in the SPY, and it looks like a little bull flag to me, and I think we're going to push higher. So again, this ratio here, it's impressive, and I think we've made a pretty important low in the end of 2022. The other one that tells me there's a lot of strength is the transports versus utilities, which transports outperforming utilities since October of 2022, with a little bit of a dip in here, and now back to the upside. Again, you need those wheels to keep moving, right? And everything that kind of happens in the transportation field doesn't tell you that those moves are, listen, the stock market, it's forward looking. If they would smell that there's a big recession coming or something bad happening to the economy, all these things will move to the downside. People will dump all the transports and will dump all the consumer discretionary, and they will buy the heck out of staples and utilities and all that stuff. And it ain't happening. It ain't happening. And to me, that's the value of studying the market here and looking at some of these ratios and not listening to CNBC or, people telling you kind of economic data, that's lagging. So the price and where the stocks are moving, they're telling you what's going on. Large growth versus large value. Again, in favor of large growth, pretty flat with the value in here. When we had this drop, again, nothing towards value necessarily, again, which shows appetite for risk. Look at the mid-cap growth versus mid-cap value. Same thing. Ratio is moving to the upside, actually has been moving to the upside since October, actually the summer of 2022, when a bunch of the stocks found the lows, actually, way before October 13. And then looking here, this is small cap growth versus small cap value pushing to the upside also in here after a period of kind of just staying quiet and just kind of being at the same rate. In here, we're pushing to the upside. So again, these to me are signals of a pretty positive market. And we'll take a look at the SPX, and I'm going to close out with this. And this is the number of new highs versus new lows. Look at the greens since October 13. Look at the reds. Look at the reds before that when we had the bear market, and look what's been happening since then. Even today, we had 25. Look at the rally today. 25 stocks, 5% of the S&P 500 went and made 52-week highs in here. Okay. It's just 5%, 5% today, 5% tomorrow, and eventually we're going to get to 60 to 80% of them making new 52-week highs. Now, that's when you call it larger bull market, but you got to start somewhere. And this is kind of how it starts. That's the 5% move, right? That's the new highs minus the new lows percentage, 5 right there. I just kind of wanted to put attention on that. We had a little bit of a red last week. And then for the month of February in here, but it wasn't that much. It was basically again, just kind of under 5%, and it did not continue with its acceleration lower. Guys, this is it. I don't know if I convinced you, or if I do need to convince you, or I don't, or I don't. It doesn't matter to me. I will just present you what I see the market every single day. I appreciate you watching. As always, don't forget to follow me on Twitter. Don't forget to subscribe to the newsletter. I am your host, the Cowboy. This is Elliot Wave Cafe. I appreciate every single one of you, and I will talk to you next week. Bye bye.